good day, all. Ira Epstein of Linn Associates with your financial market update for this Tuesday, the 19th of March, 2019. Just getting on past 4:40 p.m. Central Daylight Time. As you take a look at what's going on in these markets, the one thing that to me is evident is we've run into a resistance area that we crawl to higher highs and back off a little bit. I've been writing about this in my newsletter, and it's still what's going on. That doesn't mean you're out of the uptrend. It means where you're at. The markets tomorrow got the FOMC meeting that comes out, their announcement around 1 o'clock p.m. Central Daylight Time. About 1:30 or so begins the press conference. Everyone's going to look at the dot plot. That is where the 7 members minimum of the Fed that are on the Monetary Policy Committee commit to what they think is going to happen 3 years out. That's pretty big guess, remember that. Then you have 12 regional bank members that can join in. So the market focuses there. Ahead of time, the market's hoping to see the Fed use the word patience. You're getting the dollar down a little, kicking up the metal markets and a mixed market in stocks. So as we take a look at a weekly area chart of closes, it's hard to argue that this market has done anything but roar. That's the word, roar to the upside. Here's a question I have. Was the month of December wrong? I mean, we had this big break and you've recovered that break. And remember, this is on an area chart of closes, but why did it break that much and come that much back up? That's something that people are debating already. When you look at a daily bar chart, you can see how this market's just climbed away. There's certainly nothing bearish there. The trend is higher lows, higher highs, bullish. The market is over the 18-day average of closes. This is the 200-day in the gray. The 100's way down here. That's all a bullish setup. On breaks, you'd have support in these different levels in theory. Where's the resistance in the market? Well, you're there. This is the upper Bollinger Band, and the market has been running against it for the past 5 business days, but really very minor gains. The market is grudgingly working higher. That doesn't mean it can't take off out of here. That's not what I'm saying. The bulls are in control. As you have the swing line up, the bias is up because you're over the 18-day average, but you are in a resistance area and you are overbought. So anyway I look at it, that's the analysis of the chart. Do I know what the Fed's going to do tomorrow? No. Do I know what the reaction to it's going to be? No. Guess what? Neither do you. When we take a look at the NASDAQ, this is a bit stronger looking of a chart. Number one, if I come back to this chart, you still have more or less the sideways pattern. This has been in a breakout, and if you've been paying attention to the semiconductors, which are a big factor here, they have gone dramatically to the upside since Christmas Eve. The market's got higher lows, higher highs. It gets up and over and then back under the Bollinger Band. Here, while we're overbought, both numbers are over 80. Day before they were over 80 and the day before. So we have what's called an embedded reading. It is when you convert from being overbought, which is what you have right here in the S&P, where both numbers are going sideways over 80, and that's considered bullish until, let me make the statement, until the red line closes under 80. And if it did that, then I'd look for prices and the 18-day average to try to make a run at each other. Until that happens, I view, as long as this number stays over 80, that the breaks in the market, the pros are looking to buy. The Dow's a completely different looking chart. Complete sideways action. Definitely higher lows, higher highs, just like the other indices. The bias is up because you're over the 18-day average, but you're not in overbought territory, nor are you embedded. So you got 2 elements there. I wouldn't be surprised that the market just hangs around that 18-day average as it waits for the Fed. Same thing in the Russell. Look at the sideways action of the Bollinger Bands, these black lines. You get up to, and you're not really getting very far from this 18-day average of closes. The market just sort of runs out of steam right there in the near term. In the VIX, as I said, I think on the first challenge of the bottom of the Bollinger Band, what I'm noticing is I think the pros are writing puts. I think it. I can't prove to you. But I think they do that, and I think they try to come out at these 18-day average of closes. I've been watching this phenomena for a long time. I also think they try it on the upside, but let me tell you why I think the downside is what they favor. You're already down to a 12 reading, 13 reading in the VIX. It's one thing to pop up on a surprise and all of a sudden catch the market off guard. But what are you going to do on a surprise here? Are you going to take it down to 6? I don't think so. So I think that they get more aggressive on that part. Do I know that they're not going to go to 6? Heck, if I knew that, I'd be the richest guy in the world. In the bond market, you changed the complexion of the market today. You had what's called an outside day down. The market broke back. Look at the 18-day average, 145.14. You hit 145.12 as your low, and you hung right in there. This market's now neutral going into tomorrow's FOMC data. Overbought here. The swing line down in prices over the 18-day average of closes. That's a pretty crazy chart. When we get to the 10-year notes, I'd be watching this red line. Probably tonight it's going to cross under 80, which means momentum to the upside's waning coming out of the market. Might be ready to get back to the 18-day average of closes. You need to open higher and stay higher tonight, I think, to prevent that from occurring. The trend is up, higher lows, higher highs, but I'm concerned that this market is waning. Now, if we look at the market, both numbers today finished over 80. Yesterday, both numbers that make up the slow stochastic were over 80, and the day before, and the day before. So we have what's called an embedded reading. It only takes several days to do that. If the red line closes under 80, it often leads to price and the 18-day average coming together. It's not a big deal here because they're so close to each other anyways. When we come to TLT, a warning sign. You've got the market with lower highs and lower lows. Today's low took out 120.92. So with that, you've got the swing line down. However, the market did close over the 18-day average, so the bias is up and you're overbought. Nothing on the chart. In the dollar index, the trend is down. You've had lower highs, lower lows, and you've been able to successfully close under the 18-day average, which puts the bias down. Momentum is pointing down. Resistance is back at 96.10.5, and if the market can break down, maybe it'll make a run to the 100-day average. If that should give ground, then the lower Bollinger Band. The problem, of course, is you got the FOMC meeting, and that throws everything in the air because you don't know what strategies are coming out, what the algorithms are going to do when they see the report. Is anything going to change in the wording of the Fed? And then after that, we get the FOMC meeting and the dot plots. Don't forget that. In the eurocurrency, this is an attempt at a breakout to the upside. Higher lows, higher highs over the 18-day average of closes. The question is, can the market get away from the 18-day average of closes here? Does it get anything bullish with eventually European monetary policy? Maybe a Fed that's very dovish, you don't know. But if it can go up, it's got pretty strong resistance at the 115.28 to 30 zone. In the British pound, I'll let you figure that one out. Everything I'm reading on Brexit is so wild, but there's good news. And the market's been showing it. Basically, their economy's doing well. And I wrote about that today in the report. So you still have a pattern of higher lows, higher highs. The market did hit resistance at the upper Bollinger Band, came down recently to support at the 18-day average. Now, should you get under 132.43, that can turn the trend temporarily back to the downside. You then have probably lower lows, lower highs, a low underneath the 18-day average in the last break low, and with momentum already up overbought, you could be turning that down. So I think the bulls have to defend that whole zone. In the Japanese yen, you're still very much in a downtrend. Lower highs, lower lows. Momentum is flattened out with the bias down. I think this market got itself here near that 18-day average as it gets traders that often say to themselves, okay, if there's a surprise, do I want to be in the yen? Because that could be the safety valve. We'll see. Bitcoin. got over $4,000 an ounce. It tried to get up and over the Bollinger Band and stay there yesterday. Today, the market $39.95, second day in a row, but just barely hanging at that point, and it's overbought. I don't know if it's going to be able to break out of this angle or not. If it gets over 40.25, the odds favor it, and that could put 41.49 in play. If you start backing off here, you could even make a run to the 18-day average. The overbought part of this market is problematic, but the trend is up. In Brent versus WTI crude, you got down to this $8 zone, and you're just sort of hanging there right now. As you can see, you've got this sideways action, and the question is, what does the market do to resolve it? Is it going to break out to the upside? And it is in an uptrend with higher lows and higher highs, although today's high didn't quite take out 68.02. Should you take out today's low tomorrow, you'd all of a sudden, just doing that, end up with lower highs, higher lows, and that would be very neutral. The overbought condition is of concern. WTI, our grade of crude, I think it had a favorable API number report today. EIA and the estimates are nowhere, the estimate is bullish as the actual numbers that came out of API. Which one's going to prove the other wrong is going to be the question tomorrow. You have lower lows, higher highs. You keep running this Bollinger Band, pushing higher, not going dramatically higher, similar to what the S&Ps are doing. If the market falls back, support could come in. I can't say it will, but I would expect it at 57.45, about $2 lower. And I'm watching if this market embeds. So let's take a look. Both numbers over 80 today, both over 80 yesterday, but not the day before. Tomorrow's a crucial day in this market. The market that's been very strong has been Rebop gasoline. Hasn't given much of a break. I mean, intraday you get about 2 cents or so. The question is, what do you do from here? Is this market going to make the spring-summer play and shoot much higher? Could. It's in an uptrend. It's riding the upper Bollinger Band and has the strongest of the technical signals with an embedded reading. If the red line were to close out under 80, then I'd look for an attack of the 18-day average. Barring that, I think the pullbacks continue to get bought by the pros. And in the nat gas, while it's up today, it's got this enemy, the upper Bollinger Band, as the market's approaching, in fact, it's in overbought territory. So I'll call the trend up. You could hit an upside target of 290.5, support back at the 283.5 zone. You know, one of the things we do for traders is we put together ideas in trading kits. Now, if you're a new trader and you're looking to learn about the markets, chart patterns, technical studies, maybe you want ideas onto what we're putting out as trades. Well, when you sign up for this, we get hold of you, put it all together for you. It's free. You get the brochures from the exchanges, access to those, 2 versions of our charting software. I think you'd do a lot of yourselves a favor if you're new to these markets getting this. How do you get it? And it's free. Go to our website. You can sign up for it or give my staff a call. They'll be happy to send it out to you. In the meantime, I'm Ira Epstein. Looking forward to the FOMC day tomorrow. Talk to you then.